Welcome back to Investing Talk Podcast. Today, we're taking a closer look at LifeMD, a company making moves in the telemedicine space. You've gathered some interesting info on their recent developments, some analysis too, and we're going to unpack that. Our aim here is really to pull out the key insights and help you understand what's important about this company right now.
That's right. We got details on a few things. First, their plan to make Wegovy, the weight loss drug, more accessible. Then there's their upcoming Q1 earnings report, which is just around the corner, and also their recent move to start accepting Medicare for certain services. Beyond the news, we have some broader analysis, their business model, market position, financials, the risks and opportunities.
Okay, good. So let's start with the news, maybe connect the dots later. This Wegovy announcement came on April 29th. They're planning to expand affordable cash pay access. What's the thinking behind that?
Well, the main thing here is tackling the cost. Wegovy it's in high demand, right? Novo Nordisk makes it. But it's expensive, and insurance doesn't always cover it, or not fully. So this cash pay option is aimed squarely at those patients.
Okay, so addressing the affordability gap, how does that benefit LifeMD itself, though?
Well, potentially quite a bit. Think about subscription revenue. If they can offer this popular drug at a price people can actually afford out of pocket, that could attract a whole new wave of subscribers to their platform.
Right, it becomes a major draw. Interesting. Now, before that, on April 17th, there was the Medicare news. What exactly did they announce?
They extended their insurance acceptance. So now Medicare beneficiaries can use their insurance for LifeMD's virtual primary care and also their weight loss programs.
Okay, Medicare. That opens up a pretty significant demographic, doesn't it? What's the potential impact there?
It could be substantial. You're talking about a large population, and often one with significant healthcare needs, including obesity management. Plus, virtual care offers convenience that might be particularly appealing to seniors. If they market it right, this could really accelerate their top-line growth.
Definitely something to watch. Okay, so connecting this to financials, their Q1 2025 earnings are coming up May 6th. What should we be looking for in that report?
Right, that'll be key. The market will be watching closely. We need to look beyond just the headline revenue and profit numbers. I'd focus on, patient acquisition costs, CAC, how much are they spending to get each new patient, and then lifetime value LTV, how much revenue does that patient generate over time? You want LTV to be significantly higher than CAC, obviously.
And you mentioned their pharmacy, too.
Yes, prescription fulfillment rates through their own pharmacy. That's important because it speaks to their operational efficiency and potentially their margins. Running their own pharmacy, if done well, can be more profitable.
And how do these metrics tie back to the Wegovy and Medicare news?
Well, the report might give us the first clues. Is the Medicare expansion bringing in patients cost effectively? Are those patients generating good LTV? Are they seeing an uptick in interest or signups, potentially related to the Wegovy cash pay buzz, even if it's early days? It helps us see if the strategy is starting to translate into better unit economics.
Got it. Okay, let's zoom out a bit. LifeMD's overall business model. The info suggests it's vertically integrated. Can you break that down for us? Why is that significant?
Sure. Vertical integration here means they control or try to control more pieces of the puzzle. They have their own tech platform, their network of doctors across the country, and, as we mentioned, their own pharmacy services, launched late last year. Owning more of that process can theoretically lead to better efficiency, maybe a smoother patient experience, and potentially capture higher margins compared to just being, say, a platform connecting patients and doctors.
And they have their own EHR system, too?
Yes, their proprietary electronic health record system. That's another piece that can streamline things internally and maybe boost margins down the line.
Okay. And the virtual care market itself is huge, over $100 billion, apparently. How does LifeMD try to stand out in such a crowded space?
Good question. One key area is their focus on GLP-1 drugs for weight management. That's a hot area, and they claim over 50,000 patients in those programs already. That specialization helps. But they're not just weight loss. They cover over 200 conditions, aiming for broader appeal too. Their strategy seems to have three parts: direct-to-consumer subscriptions, B2B solutions like partnerships, and integrating with insurance.
Speaking of partnerships, we saw mention of Medifast and Ascend Therapeutics. How important are those?
Those are interesting. The Medifast deal, I think it was $20 million, suggests other companies see value in their platform, which is a good sign. Partnerships like these can validate their approach, maybe open up new channels or services. It shows they're building connections within the healthcare ecosystem.
Right. So thinking about that ecosystem, how does LifeMD stack up against competitors in the broader telehealth landscape?
Well, it's definitely a growing market, but very competitive, as you said. Companies like Teladoc are much larger, obviously. An interesting angle for LifeMD might be their cash pay focus, like with Wegovy. It could make them less reliant on complex insurance negotiations compared to some rivals. But yeah, competition is fierce. They need to execute well.
Okay, execution is key. Let's talk risks. What are the potential downsides or challenges investors should consider?
There are definitely risks. Regulatory scrutiny is always a factor in telehealth, especially around prescribing practices. Rules could change. Then there's the economy. If things tighten up, will people cut back on cash pay health services like weight management? That's a possibility. We can look at related companies like Medifast for clues, maybe. Their reliance on prescription drug economics is another factor. And, until they report earnings, financial transparency is somewhat limited.
Okay, those are valid concerns. On the flip side, what are the big opportunities?
The opportunities are pretty clear, I think. The Medicare expansion is potentially huge, tapping into that large demographic. Making Wegovy more accessible could be a significant growth driver if demand holds up, then they manage it well. Broadening insurance acceptance overall could lower their patient acquisition costs. And just the massive demand for GLP-1s, that's a strong tailwind they seem positioned to ride. The partnerships also add credibility.
So, tying it all together for the stock price, what might be driving recent movements and what should people focus on going forward?
Well, the recent stock activity likely reflects anticipation. Anticipation around monetizing Wegovy demand through cash pay and growth from Medicare patients. The market seems to be pricing in some optimism about these moves, but the real test is that May 6 earnings report. That's the key event.
What will analysts be looking for specifically?
Confirmation. They'll want to see if the numbers back up the narrative. Are subscriber numbers growing? Are the economics, CVAC LTV, looking healthy? Any updates to financial guidance will be crucial. For anyone wanting real-time data, check Bloomberg, TradingView charts, and definitely look for the 8K filing on SEC Edgar right after the earnings call.
Okay, let's try to synthesize this. For you, the listener, LifeMD looks like it's making some smart strategic plays. They're positioning themselves in high-growth areas, telemedicine generally, and the huge interest in weight loss drugs specifically. Adding Medicare and pushing cash pay options like for Wegovy could give them an edge, but like any investment, there are hurdles. Regulation, the economy. These are things to keep in mind.
Absolutely. And that brings us to the really interesting part right now, that upcoming earnings call on May 6th. It's kind of a litmus test. Are these strategies actually hitting the bottom line? Those metrics we talked about, SEEK, LTV, prescription fulfillment, they'll tell a big part of the story about profitability and future potential.
So, the bottom line. LifeMD seems like a company with real potential in a very dynamic market. But you absolutely need to stay informed and really watch their financial performance to get the full picture. Hopefully, this discussion gives you a good starting point for your own research.
It's definitely one to watch closely in the coming weeks.
We really encourage you to subscribe, like this analysis, and leave a comment. What stands out to you about LifeMD's moves? Any questions still lingering? Your engagement genuinely helps us figure out what topics to tackle next.
We appreciate the feedback.
And finally, just a thought to leave you with as you dig deeper into investing. As telemedicine keeps evolving, and as it intersects more with these really high-demand treatments, how might companies like LifeMD actually change our basic understanding of healthcare access, and affordability over the next few years? It's a big question, certainly worth thinking about.